Hi, everyone. Welcome back. I'm Andrew Boston, and we're sitting down with Dan Kang, the CFO of Mercury Bank, and much more importantly, active member in the CFO circle. Dan is the only CFO I know that still uses a Pixel, which explains why Mercury is profitable and good at cost controls. So you've had a fascinating arc. You started your career in banking. You went to Square. You went to Digit. First finance hire, I believe, there, and then first finance hire at Mercury. So clearly a glutton for punishment. And I guess you're a banker again at Mercury. So that's exciting. Full circle arc. For those who don't know, can you tell us a bit how your path evolved and how you got to where you are today?
Yeah, for sure. I guess starting way back in high school, I kind of had this very idealistic vision of business where, hey, businesses should have some sort of societal like beneficial impact, and you could also make some money along the way. That's why I went to undergraduate business school. I went to school in New York, where everyone was determined to be an investment banker, and that's exactly what I did not want to actually go be. So I did a series of entrepreneurial internships. So I interned at a startup nonprofit that built schools, interned at a organic granola company, where I was at Whole Foods handing out samples and all that, and graduated college and thought, hey, I actually do need to pay back student loans. Did the investment banking route. That transitioned into a private equity career where I actually spent a lot of time operating with the companies, spending time with executives. And that's actually what I enjoyed way more than the investing part of just how do you build a business? How do you actually think about a product, bring it out to market and so on? Problem is in private equity, you're typically dealing with companies that are a little bit more mature, a lot more stable. It's a very different type of technology that you're actually talking about. This is back in 2014 when I was in San Francisco Bay Area. There were so many exciting opportunities kind of all around. I just thought that like this is a wave that I can't miss if I really want to be part of technology. So transitioned over to Square in a finance and strategy role. This is back when they were, I think, around Series D or so, about 600 people. And love for operation really kind of took off from there of just being in it, like really spending time with product managers, data scientists, people who are working on the go-to-market side. I just really loved working that type of interdisciplinary environment, like building products that actually made sense in the real world. So going back to kind of what I cared about in high school, right? Like my parents ran small businesses. They ran dry cleaners growing up. So having that connection with small businesses through Square was something that really resonated with me. And from there, just kind of kept chugging along. I wanted to get a real classic Silicon Valley experience where I wasn't sure if my paycheck was going to clear in the next month or so. So joined Digit. That was a 30-person company. That's awesome. I was building within a consumer fintech space, really focused on financial health and how do we actually use technology to improve savings behavior for individuals, and really kind of leveraging that to translate into more of a proper neo-banking and investing experience or so. Sold that company in 2021 to a public company. And I thought I was kind of done with fintech. I've done fintech for 8 years at that point. Kind of thought, hey, like, let's see what other parts of the economy are being disrupted by technology. But yeah, I got to reach out from Mercury. And Mercury, I think, was a bit fascinating in the sense that they were building for me as the end consumer, as someone in the finance seat, right? Really starting with how do we provide a platform that marries kind of banking services and providing like a really robust platform on that side, while also marrying that with finance software and finance tools that really help entrepreneurs, founders, early finance teams really be able to scale up in a great way where they could actually operate their businesses really seamlessly and efficiently. And that's something that really resonated with me when I was speaking with Ahmad, our founder, CEO. And 3 years later, still here, and we're still doing a lot. And I think that vision's really kind of held up in a lot of ways.
Can you tell us a little bit of your understanding of the origin story and why, you highlighted a few examples of why the world needs another bank, but how did it get started? And then when did you find out that there was product market fit? Like at what point was it clear that this was working?
Yeah, for sure. I'll try to channel my best Imad impression here. So Imad is a 4-time founder. I think the prior startups that he was operating, he was always frustrated by the banking experience of, going into a branch, spending hours, bringing ID verification material, right? And then once you actually have the account, doing simple things like wires are really painful. You find out that your checking account isn't enabled for wires. You have to go back into that branch. You have to get a random phone call at a random hour between the hours of 9 and 12, like during the day, to actually then go approve the wire and so on. And there were so many of these like experiences that felt broken in the banking experience, where it wasn't really an enabler for people who were looking to build businesses. It felt more like a blocker to how do you actually go run and operate your business. So he had this idea back in, I think it was 2014 or 2015, when he was actually working on his prior startup called HeyZap. And he kind of assumed that someone was going to go figure out this problem. It felt very obvious to him. And he had never built in the financial services space before. So he kind of thought, hey, like, seems like a problem area. I'm sure someone else will figure it out. Come 2017, no one had figured it out. And Imad thought, like, all right, like, I still think this is like a really important area to go innovate. Let me go do that. So he chatted with a lot of folks who had built in the fintech space. A lot of lawyers actually were like a great source of just advice about how to go approach building a fintech company, and a lot of investors as well who had invested heavily within the fintech space. And I think Imad's like great in the sense that he likes working on like hard problems, but problems that actually have some sort of solution. So he thought the solution felt pretty clear in terms of what those product requirements should be, but it's building in fintech. It's not an easy thing, right? It's not you just build a piece of software and you ship it, right? There's regulatory and like compliance considerations for how you actually do like not only build a product, but also manage the customer relationships, how you communicate with them, the requirements to actually onboard them, etc. So he thought it felt like a really meaty area, and he got excited by the idea of being in a space that he could go build on for years and years and years. And I think that's kind of what he was looking for after having done startups 3 times prior to founding Mercury. So he spent 2 years building the product, which I think in today's world where you kind of think about iterating on product and getting out to market really quickly is a little bit like counterintuitive when you kind of apply that general Silicon Valley ethos. But he really had a pretty high bar for what a minimum lovable product really looked like. There are certain things like, hey, I really want the bank account to be able to do like basic payment flows of like being able to do wires. International wires was part of that as well. ACH, kind of debit cards, standard set. But then also having things like really robust user permission and access controls that you typically wouldn't find in what you would call an MVP product. And he also wanted to be able to onboard international business owners, just himself having been from Pakistan and growing up in London, just seeing some of the challenges that a lot of entrepreneurs who come to America really hungry to go build, but run into some of these like older school thinkings of how like risk really is managed just because someone doesn't have a US passport, but can actually open up a bank account, right? So he had a pretty high requirement list, launched the product in 2019, and I think they were growing probably 40% like month over month for quite a bit for the first year. And I mean, the way he tells it, he knew he had product market fit when there was a company that wired in $1 million into Mercury, like no questions asked, didn't ask him out any questions, like, oh yeah, Mercury seems legit. Let me place $1 million I just raised from seed investors into the account. Crazy. And he knew that there was something there where people were willing to take that leap of faith and trust just because the product was there. And it was clearly something that resonated more broadly. And from there, I think just like the organic growth has actually continued to be really, really strong for the company, even to today. And I think that like speaks volumes to like, hey, this like product is something that really resonates with the broader market out there.
Yeah, that's impressive. And everyone loves their wiring experience currently, which is why, I understand why you'd put $1 million on the platform without asking questions. The company's evolved a lot since you joined, as well as the market. Can you explain, talk a little bit about how the market's changed since you joined three years and change ago?
Yeah, sure. I think when I first joined Mercury, it was kind of interesting. Our biggest competitor at that point was Silicon Valley Bank and First Republic, right? They have been pretty ingrained within the founder ecosystem within Silicon Valley, had built up a really nice flywheel between their consumer businesses and their business banking businesses as well. And I mean, the SVB crisis obviously happened, which we chatted a little bit more about in later detail. But I think the other thing that's kind of changed quite a bit outside of like the competitive landscape on the banking side is really just like this openness to new tools when you think about the tech stack for finance teams. The historical wisdom was, hey, like you do payroll with ADP, you do your accounting with Oracle or NetSuite, then you kind of like don't mess with that because there isn't reward there. And I think what we found over the past like 5 years or so is that, there's been this huge lag behind of what the technology capabilities were available out there and what finance teams actually had access to. And that gap was quite huge. So there's a really big market opportunity where I think people were seeing technology advance in every other part of their lives. But when it came to work and actually like closing the books or like managing like spend and whatnot, it felt like really, really antiquated. So I think just like that lag has caught up in a way that like people are very much like hungry and wanting these type of newer experiences that actually help them like get time back, like run their businesses in a much more scalable fashion and so on. So I think the intersection of those two was kind of like a great timing for Mercury to really launch and take off in the marketplace.
Yeah, that makes sense. But you're the finance guy within this finance org, right? Does that mean you spend more time being product manager? do people care about your feedback? I guess is the question.
Yeah, I was actually answering this question yesterday. I actually spent a good amount of time in Figma files, and people are shocked that like a CFO is in Figma files, right? But yeah, I mean, us being the like target customer in a lot of ways, we are constantly dogfooding our own product. I don't know if people like that term, but we're constantly using our own products.
Yeah.
So Mercury, we actually run all of our financial operations through Mercury as well. So, today we have, hundreds of millions of dollars in cash.
Yeah.
We can manage that pretty well through Mercury. And we've built a solution in a way that could actually scale up to serve customers like ourselves over time as well. So there's I get to be customer zero in a lot of ways. So I'm constantly giving feedback to our engineers, the product teams, designers. And I think that's what made the role really interesting. And it's actually become a vector in terms of how I hire on the finance team as well. Like my accounting team and my controller, she's probably one of the best feedback givers at the company, which you would not expect from someone in a controller position or role, right? And I think it's just like a reflection of the type of people that you're able to attract onto a finance team by building for them in mind. And then also just have the fun, like be a little bit, have the job be a little bit fun and exciting for them as well.
We talked briefly about the SVB crisis. Like that was a big kind of trial by fire moment for the company. Can you just walk us through what happened and how you kept the wheels on?
Yeah. Leading up to that moment in 21, I think we very much felt like we were constantly in like hand-to-hand combat with Silicon Valley and to a lesser extent First Republic, right? Like they had really, really deep relationships with VCs and with like founders and the broader ecosystem around here. And they were really aggressive on things like venture debt and like really being kind of like the go-to de facto lender in that space as well. So for us, when we first caught news, I think it was on the Thursday afternoon that they were going to raise this capital because they had all these long dated treasuries on their balance sheet. And there was the fallout from that news being publicly put out there. I mean, it was a bit shocking to us. We didn't really fully understand what the repercussions would be in the coming hours or so. But it was kind of wild to actually see just like the amount of inbound activity we got from people who were looking for a safer place outside of Silicon Valley. We were getting pinged by a lot of VC investors who were scrambling to figure out, hey, what does this mean for my portfolio companies? A lot of portfolio companies, a lot of founders aren't financial operators, right? So they turn to their VCs and looking for advice. And the VCs are not finance people either in terms of like, how do you like go manage financial operations? So we had a ton of inbound from that regard. So in the moment, initially, it felt a little bit exciting. But then once you have an institution like SVB being, deemed as troubled, the question naturally became like, hey, like, why is Mercury different? Right. And like SVB is actually a bank. Mercury, today we're not a bank. So I think that type of kind of fear mentality really started to spread across Silicon Valley. And it was a pretty crazy time. I think by the hour, we would literally have our deposit balances swing by billions of dollars up or down throughout that 3-4 day period through the weekend. When people were really scrambling to figure out like, hey, am I going to make payroll for my employees on Monday? That was like a big concern. We were trying to figure out like, hey, is there ways that we could actually line up bridge loan financing for our customer base for people who still had funds at SVB and was looking for ways to actually de-risk that aspect of it. So we spent a lot of those like 3-4 days from Thursday through Monday, really just kind of assuring customers. Also kind of thinking about how do we like really give them assurance? I think you could tell people, hey, we're safe, but that's also like what a bank would say if they're experiencing a bank run. Iman actually had this great idea on the Friday afternoon. It's like, hey, I could tell people we're safe all I want, but people want to feel like there's something tangible to point to when you talk about safety, right? So one of the things that we did over the weekend was we dramatically increased our FDIC limit, which is something that like no one cares about until like there's this type of situation, right? Until they do. So we were able to increase that up to, I think it was 6 million at the time. And we also built a product experience over the week on that we called Mercury Vault, where depending on how the customer funds were split across both like their bank account balances to maximize FDIC insurance, but also factoring their treasury balances that were invested in money market funds. So not sitting on any bank balance sheet, but really sitting, invested in securities backed by treasuries at the end of the day. Just give a sense for like, hey, like what are the structural protections they have around their funds and making that really clear and making that in a way that felt digestible to customers without having to explain to them like the nuances of where FDIC FDIC insurance applies, where it doesn't apply, right?
Yeah.
And that actually provided a ton of comfort to our customers who were looking for something tangible to point to. And I think it was just like a great example of like the culture that we built at Mercury of like, how do we just be super resilient, focus on the things that we can control, and just be super customer focused in terms of like delivering for them those moments of panic and so on. I think net coming out of that weekend, we actually ended up becoming a huge benefactor from the Silicon Valley situation. We ended up with billions of dollars more in customer deposits. And I think people came to really trust us as like, hey, there's a place that we could go to and trust. And I think prior to that, it was always a little bit of like this, fight for brand recognition within Silicon Valley and so on. And I think that really kind of put us on the map in a lot of ways. We had, I think it was not the exact number, it was probably like 50% of the company, including salespeople, support people, all in our onboarding queues to try to get people onboarded as quickly as possible. And we had thousands of people who were applying to Mercury in the 2-3 day window or so that we wouldn't have expected that volume for. And we actually do like review every single application with the human today. So just being able to have the company rally around that moment to actually pitch in like that, where people were working probably 12 to 18 hour days. I was writing like content around like, hey, here's how to think about like bank financial health and so on, just to kind of educate the broader market for how to think about the problem as well, rather than just like leading with fear. It was just like a really awesome moment to see like what Mercury could go do in some of these like defining moments for the company.
How many customer calls did you take?
Actually, it took a few. I mean, the circle number was also interesting too. Like, it was actually like a great place to just get a pulse check for how are people thinking about the situation, right? And there was like a lot of great chatter and discussions. And I kind of threw my hat in there. It's like, hey, if people need help and you're looking for an option in a non-sales way, we are here. Let us know. We'll get you onboarded quickly, and you'll at least have some sort of backup option. Yeah, I think those type of networks go like a really long way when we kind of think about how do you get a pulse check of what's happening, but also just be like a sounding board and be able to be there for others as well. We obviously serve a lot of founders and startups and so on. So being able to have a little bit of that foot in the door with that broader community, like definitely goes a really long way in terms of how we think about building trust.
That's awesome. And I remember we tested the boundaries of Google Groups those few days. And every time I hit the reset on like, you get to 1,000 replies, you have to reset. And like at the second reset, I was like, oh, Dan must be struggling right now. All I have to do is hit like, keep it alive. How did that change the culture?
I think it proved that we could go through very difficult situations. And honestly, I think it was a test of leadership as well for the entire exec team, right? There was not a single exec team that was just kind of sitting idly during that weekend. I mean, I think it really starts with the mod in terms of, I think it's really in those moments you either freak out and have the rest of the company freak out, because, like how many of us have actually lived and like managed through a bank run type scenario, right? Like I haven't, like speaking like perfectly candidly, right? I think the way that like Imad showed up in terms of like, hey, here are the set of things that we do know, here are the set of things that we can control, and here's how we think like the customers are actually reacting in the situations, and how do you just kind of meet them where they are, and just focusing on the set of things that you can control and really focusing on customers, I think spoke a lot to how we just think about building the company and the product long-term, regardless of the situation. Doing a bank switch is really painful for customers, right? It's like, I mean, there's that stat that it's like, one of the longest term relationships that a lot of people have is with their banking provider. So we don't take that lightly. And I think for us, like actually not being like the bank of record legally, today, I think we spend a ton of time investing in what does the rollover experience look like for someone who might be on Evolve and that we want to switch over to one of our other bank partners, and just being really, really thoughtful about like, how do we remove as many points of friction as possible, as much uncertainty as possible, so that it's really clear of like, hey, I'm paying XYZ vendors through my account. Like how exactly can I switch over those ACH debits or those like automated card payments over into a secondary partner bank? And I mean, it's pretty amazing that we retain something like 95% of deposits in that rollover during a time when you're asking people to actively update their banking credentials across vendor portals and so on, right? So yeah, I think it like speaks to how much customers are like really enjoying the product. We try to make it as least painful as possible, but there still is pain involved with actually making a bank account migration. But I think for us, again, it goes back to like, how do you just like insanely obsess over what that customer experience look like, even in situations where it might not be fun to ask customers to go do something.
Yeah, it's impressive. I guess that bleeds really nicely into the new products that you're building. But you've expanded into cards. That seems to be going very well. Spend management, broader finance software. Where else do you want to take the company? Like, where are those new bets today? And then where do you want to go from there?
Yeah, it's interesting seeing the Series A deck that Ahmad put together, where he had kind of these bullets that were one of them was about kind of like the bank, but one of those bullets was always about how do we leverage the banking relationship and turn it into a set of like fuller fledged like financial products where you really think about Mercury as a platform. So you're not only getting your banking services, but you can actually just run your entire finance operations through the Mercury platform as well. And I mean, it's that type of product vision and thinking that attracted to me to Mercury in the first place, where at Digit, where I was a one-man finance team for quite a bit of time. And I was, running payroll. I was like building the forecast model. I was getting the books closed for our outsourced bookkeepers. And there were just so many disparate systems that we were living in just to kind of do the nuts and bolts of running a finance operation that, probably 70% of that was like pure, just like admin operational work that wasn't adding value to how we thought about growing and scaling the business. So if we could remove as much of that like crud work as possible by collapsing things down into a singular platform where like data flows really seamlessly from what's happening on the cash side into like the different types of accounting like journal entries that you might have to make, or the different types of like customer invoice payments that you might be sending out. Like that felt like a really obvious thing for us to go build into. And I would say last year we launched a suite of products across, bill payments so that you could actually go receive invoices from your vendors. It'll queue it up within the Mercury experience. We have approval logic that you can customize and load so that, you could actually manage all of like your AP activity like very seamlessly. We also launched the customer invoicing product where, surprisingly, there seems to be like a lack of like really great options for that. So we built an experience where you could do customized invoices, send it out to your customers. You could set them up on ACH debit, set up recurring invoices, set up invoice reminders, kind of like really owning that entire workflow. We did something similar on reimbursements and spend management as well through our charge card product, and really building like the software suite around that as well. And I think the beauty of building these things out, it's not simply that, hey, we want a bunch of products that we could cross-sell to our customers, right? Like, sure, there's a business case to do this, but all these things work so much better when they're tied in and built on top of banking, because that's ultimately where the cash needs to move in and out of, right? And for most people, it's really annoying because you have to do this like pull from your bank account through ACH that takes 1 to 3 days into your AP provider. Then the AP provider wants to hold those funds for a handful of days because they earn a little bit of float. And then they do a push that takes, through ACH that takes like 1 to 3 days or so. And like that entire cycle of paying a vendor, just to use that as an example, is like really painful when you have that workflow segregated from the banking side of things. So for us, it just felt really obvious that our customers are already living in Mercury on a daily basis. As they grow into these more sophisticated needs where they do have, dozens or hundreds of vendors to go manage, or they do now have, their first customer, but soon like their, 20th and 50th customer, and they have to go manage customer payments and so on, making that really seamless by having all those workflows collapsed into one singular banking platform felt really obvious. So we launched these suite of products last year under a little bit of like a SaaS bundle type of monetization play, and something that we've continued to iterate on this year as we've like made each of those individual product features better, but also really focus on the connective tissue for how all those like product synergies are really captured by all of them living on a single platform.
And that combination kind of leads you into competing with the Ramps and the Brexes of the world. How do you view your ideal customer profile? How is it different? How are you different compared to the other offerings out there that are in the challenger category?
Yeah, I think one of the things that I love about the period that we're in as a customer, not as a Mercury employee, is that there's so many great options out there now in terms of like the tools that you go use that, rewind 5 years, that was not the case, right? You were still talking about like very old school solutions that felt like you were stuck in the 90s or the early 2000s. For us, I think our real point of differentiation is we like to start with customers early. So we are not an enterprise sales play where let's go try to capture as much card spend as possible by, having an enterprise sales motion and so on. I think the beauty of banking is that you actually start that customer relationship really early on. It's one of the first things that you have to do when you go start a company, right? So it's about 70%.
You have a bank account before you have a credit card.
Exactly. Before you have employees, before you can receive investment money or anything, like you go get incorporated, and you're typically opening up a bank account soon thereafter to go run your business, right? So for us, I think the beauty is we start the relationship so early that things like attaching cards or like selling our bill pay solution feel like a really natural evolution for our customers over time. And I think it's also on us to make sure like our products are actually up to stuff. I don't want someone to use a Mercury point solution just because like, oh, I'm already on the Mercury platform. I guess I have to use this even though it's not as good as XYZ, right? Like that would be a fail from our side. I don't want to lean in on just the platform value to go deliver that. So we push our teams really hard of like, hey, like how do we make sure that we're properly growing with our customers and serving all of their needs as they get more sophisticated over time. But it's about 70% of our customers at the time of acquisition has been incorporated into the past 6 months or so at the time of acquisition. So we obviously have like a pretty diverse array of customers in terms of maturity, but kind of speaks volumes to kind of us starting that journey really early. And if we look at our cards product, which is the most mature of our kind of like net new features that we've actually launched, we just see that like as people grow into the need for a charge card, we pretty much win all of that volume and activation on a card program. Versus if you were to look at some of the earlier cohorts, you see all of like the usual cast of characters that you would actually expect, right? But that synergy behind if you haven't chosen the charge card to just like really naturally just opt into Mercury goes a really long way. And we're starting to see that type of attach rate behavior on that customer journey play out for some of these newer products as well that we're really excited about.
That makes a ton of sense because the last thing I need is another tool.
Yeah.
And do you see customers once they get at scale, do they start shopping around? Or like we've seen large rounds happen. We've seen a lot of large rounds happen. Do you end up seeing those dollars staying on the Mercury platform, or do they open up other accounts as they get bigger?
I think it really depends on the customer. I think in the early days of Mercury, there were kind of different examples like, hey, you guys don't have a NetSuite integration. I'm on NetSuite. That feels like a non-negotiable. So as the product's gotten better over time, we've actually removed a lot of reasons for someone to quote unquote graduate from Mercury. So we actually don't see much graduation churn for us today. I think we do a lot of our go-to-market activity focused on founders, but we really built the product in a way that could scale with, you know, your CFO hire and then building out a proper finance team and so on. And I think that's also part of the reason why we decided to go deep into like the financial software stack as well, to like really kind of be in a space that they're living and breathing day to day as well. So we don't see a ton of graduation risk. I think the way that it actually shows up is that, you know, as customers get to a certain level of scale, their board members, or if they're getting ready to go IPO, right? Like part of their governance structure is like, hey, like you should probably have more than one bank that you're holding deposits with. I would probably give that same advice as someone was asking for best practices, right? Totally. So I think for me, like the focus is really on how do we make sure that we are like the core of the operations. I would actually actively recommend that like, hey, you guys should diversify counterparty risk from a banking relationship perspective, purely as like a matter of best practice. So, and I think what we see is that like people generally do love using the Mercury product. That's where they do want to live like day in and day out. And we also offer things like the treasury product that offers like higher yield as well, that like can be hard to come by just through like a Chase account, right? If you open up a Chase account, and I'm saying this from like having lived it in my prior startup, right? It's a big process to then try to go open up an investment account with Chase, or I'd have to like manually transfer money out to a treasury direct like account to try to build my own T-bill ladder portfolio, right? So it's a lot of this like seamlessness that we build into like the finance workflows and for how money can be managed across like both money at rest within accounts, but also like the payment flows that I think like Mercury's really focused on providing a beautiful experience around.
Jumping back in on the ICP, like the ideal customer profile, that's changing. Can you tell me a little bit about how that's changing?
Yeah. Imad started selling founders because he was a founder himself, right? He was a partner at Y Combinator, so kind of knew the space, right? It actually wasn't this like massive strategy. It was just like, hey, let me sell the product I know into like the people I know. And it kind of took off from there. If you look at our customer base today, it's actually only about 25% of our customers who are tech startups, and only a fraction of those that are really like VC-backed tech startups. If you think about just how big our customer base is 270,000 depositors on the platform. So what that means is we have like 75% of our customer base being e-commerce companies, healthcare companies, professional services firms, real estate companies, like this long tail of customers that we've actually never really done much marketing activity towards. But I think the word of mouth around the product and people looking for a better banking solution, something that's really resonated in like a broader subsegment of the market. Really any non-cash business could go sign up for Mercury and just get a way more superior experience versus what you would get from traditional financial institutions. I think one of the things that we're focused on is, we have about 30% or so market share is our estimation for kind of VC-backed tech startups that have raised money from like seed stage through, call it like Series A, Series B or so. So we could maybe go 2x that market share, right? But it's really hard to kind of think about like, hey, how do you go drive like 20x growth over the long term by serving this like very specific TAM right here in Silicon Valley? I think in Silicon Valley, it's really easy to think that we just are the world. But the TAM is so much bigger when you kind of think about outside of like the immediate tech startup ecosystem. I think like the beauty for Mercury is like we're already seeing a ton of organic activity. So a big focus for us this year and for coming years as well is like, how do we establish Mercury more as a broader brand that's like really targeting ambitious founders? And you could be a founder, not necessarily just in tech startups, but like, hey, if you're starting up an HVAC company, if you're a dentist that's looking to open up 3 dentist offices, like Mercury should be the default bank that you want to go build a business on, regardless of what industry that you're actually in. And I think that's going to be a much bigger part of our focus, where we already have 75% of our customer base in these segments. How do we more intentionally double down? Because like these TAMs are, at least on account basis, like 10x, 20x bigger than our core segment today. I think the beauty of having started off with the tech ecosystem or tech startups is that it's kind of rare to find an SMB that's 2 people, maybe a little bit of revenue, but then might be sitting on $50 million of like VC funding that's in the account, right? So I think like they actually provide a really nice profit pool for us to fund some of this expansion into new market segments, but also some of the newer product bets that we were talking about.
Your Series C was a strong round in a difficult environment. Can you walk me through what really resonated with investors?
Yeah, it was an interesting year to go fundraise. I think fintech obviously had a huge boom in 2020, 21 or so. And then 22 was like really kind of dead, 23 dead. And then 24 was kind of interesting in terms of some activity flowing back. And then we entered this year with a lot of uncertainty, right? There was the whole tariff announcements and so on. I think the economy was really back and forth. There were, a bunch of tech IPOs that have gone out now, but in the moment when we were fundraising, they hadn't actually come out yet. A lot of them got pulled to come out subsequently. So it was an interesting time to actually be out in the market. This is in Q1 or so, really like January when we started having these investor conversations. I think if you look at Mercury kind of from a zoomed out lens, realize what's happening in terms of economic uncertainty in the moment. I think the thing that really resonated is, SMBs are a huge market segment in terms of just like how much they actually contribute to the economy and so on, right? The ability to go aggregate and build a platform within SMBs is a way that you really go win that market, in my opinion. I mean, that's the reason why like folks like Intuit and so on have like done well, because they're able to aggregate across a bunch of different solutions and offer a platform. I think banking provides a really, really interesting entry point to serving these customers that you're able to build this type of broader platform around for the reasons that we chatted about. And I think that thesis for how do you use banking as a wedge, but build a really, really phenomenal software business, a really great payments business, and a platform business longer term was something that really resonated with a lot of our investors that we chatted with as well. So we ended up raising quite a bit from Sequoia, Spark Capital, and a lot of our existing investor base actually ended up re-upping and investing in us as well. And I think they still continue to remain like really, really excited about how do we leverage the really great banking business that we built to really kind of fund the next leg of innovation and kind of growth as we kind of think about pushing again like more into these broader SMB segments, but then also kind of serving them in like deeper ways that diversify our business model and kind of create like a really interesting story around how we go deeper with customers while also like monetizing in like different ways that you wouldn't necessarily expect from a bank, right? Like most banks aren't selling like workflow software to their customers or offering the type of like solutions that we are. So yeah, we'll see how the thesis plays out. I think that's like a big part of the strategy as we kind of think about product of just like, how do we just stay really focused on the customer, like really think about how we make their lives easier in terms of like all the different like products that they're stitching together to actually run their operations. And I think alongside that, there are just so many different ways to, I guess, monetize those relationships. We have maybe, I want to say 12 or so different types of revenue streams today across, what we earn on deposits, what's invested within treasuries, across different payment types, across like, software opportunities and lending opportunities as well. So it's really interesting to see like, how do we build different wedges over time with customers as well that really continue to fuel growth as well, and really being able to do that with like this broad suite of products that's really hard to kind of come by when you think about who's really building one-stop shops out there for SMBs and ambitious companies.
Jumping into the Circle, you've been a Circle member for a while. What were you hoping to get out of it? What have you gotten out of it?
Yeah. I think I joined maybe back in 2020 or so. You could keep me honest.
Yeah.
At that point in time, let's see, I've been like a year, maybe 2 years into my first gig as like the
Yeah.
first finance hire and like the first like real like finance leader at a company in my prior startup, Digit. And honestly, when you're in that role for the first time, it's definitely like a little bit of fake it till you make it. And like, hey, I kind of know this stuff,
Yeah.
but like, there's a lot of stuff that you don't know that you just learn through like trial by fire and going through the reps, right? Similar with like founders, when you talk to repeat founders, it definitely is a little bit of like this different like know how to build a company. And I think finance hires are no different on that regard. So I was really looking for a community of other folks that I could go learn from, tap their knowledge and experiences, and just kind of taking on a little bit more of like that humble mindset for, yeah, I definitely don't know everything here. How do I go talk to people who've done this a dozen times or at least two times, like more than me, so that I can actually go learn from them? And there are a lot of like these like CFO finance type like community groups out there, but I really found the Circle one to be like having like a pretty deeply engaged community that all showed up there for each other. And it's really great when you have a situation like SVB, right? And people are honest, right? Like people aren't posturing about how smart they are or how well put together they are as a business, which is really easy to do in those type of like peer networks, right? But the level of like candor in the conversations and also like the level of practicality too. You know, it's not people throwing out like generic business advice, right? It can be like pretty tactical, like, hey, how do I think about 498 implication of $10? It's like a very common one.
Yeah, of course.
Topic that happens probably like quarterly or so, but it's those type of things.
Twice a year.
Twice a year. Okay, twice a year. But it's those type of conversations that I think like people really want to feel like they're like doing the quote unquote right thing. And I think having a little bit of that feedback from the community goes a really long way. I mean, I found it really helpful when I was like starting off as a finance leader. And then today, I think I really find it helpful to just understand like, hey, what do my peers really care about? I mean, now when we kind of think about AI, right? Like I think it was really cool the type of workshops that you guys put on to kind of help all of us get together and brainstorm on these things together. And having that like sense of community where people aren't showing up with answers to like, you know, advise each other, but really kind of like all on this startup journey where we all go through the same stuff. Like in terms of like building startups, right? Regardless of what industry you're in and so on. And being able to feel like you have a peer group that you could go to, you know, bounce ideas off of and like get feedback on, I think is really, really valuable for any leader.
What would you tell someone new in your shoes? So, you know, rewind 5 years. You're taking your first finance startup lead job. What do you tell yourself?
Yeah. I would say, don't just fake it. Like actually go really understand the nuts and bolts and the details for how to think about very specific problems, right? So I think it's easy for someone that's analytical or strategic to kind of focus on that side of the house, but there's like real operations, like specific knowledge that comes with like building a startup. That you can't just first principle your way through. So go talk to people, whether it's peers, lawyers, you know, investors, whoever it might be, to like really understand some of the core principles or rules or regulations, whatever it might be behind the things. And, you know, form your own opinion, but also, you know, I'm not just saying this because we're chatting, but like go chat with peers and go join community groups and learn from other people and just take a learning mindset to all these things. I think, you know, the best way to kind of approach life is like constantly having like a learner mentality. And I think that goes no differently, whether you're, you know, the first finance hire for the first time or whether you've been doing the job for like 10 years. I think we're always constantly learning, especially in the type of environment that we build in.
But how do you do that when you have, you know, a bunch of products, you have 12 ways of making money. Like there's a lot of things you have to learn about, right? And how do you decide when to go deep? Like what's your first principles and on point of view in terms of learning a new vertical?
And it depends on what we're talking about. If we're talking about like products, I think there are products that are pretty intuitive, easy to understand, like a typical SaaS product, like pretty easy to understand, right? You're looking at, you know, if it's kind of in our shoes, we're really looking at activation funnels, retention, you know, willingness to pay on pricing and all those type of things. But there are also more esoteric products. Like I remember when I joined Square for the first time, you know, I did a ton of research before my Square interviews, trying to figure out what is interchange. Like, oh, that's what Visa and MasterCard really do in this whole like credit card business, right? And there are things like that that's just like, you can't first principle your way through that. It's really understanding like the intricacies of like how the payments ecosystem is set up and like what are the different incentives and the way that different interchange rates or assessment fees are really established. And I think there it's, you know, you do your research. I mean, it's a little bit easier now with ChatGPT maybe, but you also just go talk to experts who really know that area. And I think being able to tap folks who've kind of like built up expertise in a given field, I think really goes a long way. And I usually find that to be the best way to go learn, right? Just have a conversation, ask a ton of questions, ask a lot of follow-up questions, and then ask more follow-up questions. That's typically the best way that you actually learn about a subject matter.
Yeah. And you mentioned AI. How are you guys using it? How do you think about using it? Because we use it a lot internally. And then we get to the math part, and it's not horribly good at that in terms of forecasting. It's very good at scraping, but not very good at forecasting. How are you using it internally?
Yeah, on the finance team,
how do you want to use it?
Yeah.
I mean, just more broadly within Mercury.
Within Mercury,
Yeah.
yeah. I think there's probably 3 areas I would segment that into. I think on the product side, I think everyone kind of puts this burden in figuring out their AI product strategy, but I don't think every single product needs to have an AI strategy. I think in Mercury's case, it's pretty interesting because we're sitting on so much interesting transactional data of our customers across all the different products that they're actually using. So I think we actually just rolled out an insights feature that has a little bit of like an LLM summary so that people can understand what's happening with their financials. And that's something that we want to be able to expand on over time so that, you can imagine you're a CEO rather than picking me at like 9 p.m. at nighttime, like, hey, just go like ask Mercury. And Mercury has like the intimate details of all the different payment activity, transaction activity that are like smartly categorized, like using AI as well, so that people could actually understand what's happening with your money flows and like with your bank balances. So I think on the product side, there's a lot of interesting things that we're exploring, just given the wealth of data that we sit on. I think the operational side is like one that a lot of companies have kind of pointed to. We have a fair amount of operations across like risk, compliance, and also our CS teams as well. So I think that's an area where, if you just go through our CS ticket backlog, there's probably 60% of those tickets that are one-touch solved that really don't need a human in the loop to like provide like really simple like macro responses to, right? So I think there's a lot there that is actually quite important for our business area. Because when you're serving SMBs, we have a really broad range where we have companies who might have $1,000 in their bank account. We also have companies who have hundreds of millions of dollars sitting on Mercury's platform and kind of everything in between. But for the lower end, like we do still want to serve them. We don't want to say, hey, sorry, come back to us when you have a bit more money, which is the way that financial institutions like typically work, right? Yeah. And I think for us to actually make that math work, we need to decrease our cost to serve them without having to sacrifice on quality of experience as well. So that's like another area. And then I think the third bucket is just like general employee productivity. So we're doing all the things of like, meeting, note taking, and how do we just make sure like people can do research like much more efficiently? How do we like organize work more efficiently so people aren't spending all their time like summarizing things and writing docs? We're a pretty doc heavy culture. There are things like that I think like maybe you're getting 10%, 5% like productivity boost along the way.
How is it changing your day-to-day workflow and how you're forecasting in terms of headcount and beyond?
Yeah, it's an interesting question. It actually is. We're doing planning right now for next year, and it does change how we think about like the growth curves for the way that teams actually scale up, right? So you can imagine looking at let's think like CS, for example, right? You can imagine like, hey, like how much headcount or dollars do we actually need per active customer? And then you kind of think about, hey, how many like tickets do an active customer like generally like generate? And for us, we're actually saying, hey, like there's 2 different levers. There's an automation lever, which we think is real, that we should factor into how we think about headcount growth relative to active customer growth and ticket volume growth. But there's also like ways that in a case where a human is required, how do they just get way more efficient at that work as well? And those 2 things really start compounding, where if you could go automate 30% of tickets, just arbitrary number, 30% of tickets, the remaining 70% used to have a handle time of, call it like 10 minutes or so. Can we actually cut that down to 5 minutes? And the type of compounding that you get across like those type of lever movements can be actually really quite transformational for how you think about scaling a business over time.
Does it change how you lead?
It's actually kind of funny because I think every leader doesn't want to be the schmuck that like didn't push their team to like really explore AI tools and so on. But I would say I'm not an AI expert at the same time. So it's an interesting thing of how do you go encourage your teams to go explore AI solutions and so on without being the expert yourself. So in some ways it's kind of nice because we're all figuring out together. I think everyone, like the entire world is figuring out together right now, particularly in the work context. So it's fun for me to kind of chat with the team of like different ways that they're exploring it and so on. I think on the finance side, it's a little bit interesting interesting. I mean, you said it's not great at math right now. So, you can't have hallucinations when you're closing the books. It's just like not acceptable, right? It has to be 100% accurate.
Yeah.
I think for us, we're actually focused a lot more on how do we just make sure like the data pipelines, the way that we feed data into our ERPs, like as clean as possible. And also how do we do transformations one step ahead of that by like figuring out like what data can we put into Snowflake? Can we actually automate things like revenue or like cost accruals? Because we have all the we have a ton of transaction volume, right? Like being in financial services. But then like we then have to do some math on it. And historically that was all done in Excel spreadsheets of like exported summary views of data rows and so on. Like today, like you could actually automate so much more of that with some of the like newer analytics tools that are really great at pushing data in and out of different systems as well. So that's actually an area that we're really excited about. I think a lot of people get caught up on like the means, right? But like AI is just one tool. Like the ultimate like end goal that you want is like how do we just like give as much time back to the team as possible so you could scale up efficiently and people are spending time on higher value tasks.
Yeah, totally. One thing from the circle that surprised me is when we ran that survey on AI competency, 70 something percent, I think low 70%, said that they were very much an AI 101 customer, which is decreased since the last time, but not materially. So people are still in that exploratory phase, which is really exciting for like how long this arc might go.
Yeah. I was actually at a conference yesterday that was talking about this theme of AI within finance. And I think that's pretty consistent where I think a lot of people are experimenting, exploring, but you ask for like really tangible examples. I think we're all still kind of working towards that. I think the thing that's promising is that just like the capabilities of the models, it's crazy how much they increase every 3 to 6 months or so. So I think it's more of a question of when, and I think the more like kind of familiarity that you can build up with how some of these models can be applied, and also what the limitations are there as well, so you're not wasting a bunch of time trying to fit a tool that doesn't actually make sense for the use case, right? It's pretty valuable, and like I'm pretty confident that in the future maybe you won't need someone like me, or maybe at least I could have a much smaller finance team without having to sacrifice on like the quality of the output of the work.
Thanks, Dan, for coming in. It's been a pleasure. I really appreciate you letting us be part of the Mercury story, and really grateful that you're part of our circle.